The ongoing trade war between the United States and China has reached a critical juncture with tensions escalating rapidly and no resolution in sight. President Donald Trump has made headlines this past week by pausing reciprocal tariffs on most countries while simultaneously imposing staggering tariff rates on Chinese imports, which have surged from 54% to an astonishing 145% in just over a week. This dramatic escalation has left U.S. businesses caught in the crossfire, scrambling to adapt to a volatile marketplace. As the Trump administration awaits a call from Chinese President Xi Jinping, the Chinese government has been cautious about further engaging with a U.S. administration known for its unpredictability. The stalemate has resulted in chaos for numerous American companies that rely on Chinese goods, from toy manufacturers to electronics retailers. Many businesses have halted shipments entirely, as the burden of triple-digit tariffs becomes untenable. Administration officials argue that the current trade status quo is unsustainable. Trump's relentless tariff increases have led to retaliation from Beijing, which has raised its own tariffs on American goods to 125%. In a recent concession, the U.S. exempted certain electronics from tariffs, including smartphones, laptops, and televisions. However, the overall landscape remains precarious, with many businesses fearing the long-term implications of sustained tariff warfare. Rick Woldenberg, the CEO of Learning Resources, a toy manufacturer based in Illinois, expressed his frustration with the tariffs, describing them as a joke. His company, which relies heavily on Chinese imports, has already seen its planned growth stymied due to the financial strain of projected tariffs exceeding $100 million for the year. "We're being asphyxiated by our very own government," he lamented, underscoring the dire circumstances many manufacturers face as they attempt to navigate the shifting sands of U.S. China trade relations. The ramifications of the trade conflict extend beyond individual businesses. The U.S. dollar recently fell to a three-year low, reflecting growing investor anxiety over the potential for a prolonged trade war. Consumer sentiment is also waning, with many Americans anxious about how higher tariffs might impact their daily lives and the broader economy. Despite Trump's claims of optimism regarding his relationship with Xi, analysts remain skeptical about the likelihood of a meaningful resolution. Julian Evans-Pritchard, head of China economics at Capital Economics, noted that China's consistent retaliation suggests that they are not in a hurry to negotiate. The absence of communication between high-ranking officials from both nations further complicates the situation. As U.S. Trade Representative Jamieson Greer confirmed, there are no current plans for a Trump-Xi dialogue. The stakes are particularly high, with concerns that the trade war could escalate into a national security crisis. The Pentagon is reportedly assessing the potential fallout from a Chinese move to cut off rare earth exports to the U.S., which could have disastrous implications for American industries reliant on these critical materials, including defense manufacturing. Moreover, the Chinese government has retaliated against U.S. companies and implemented new regulations on exports of semiconductors, further tightening the noose around American businesses. Paul Triolo, a partner at DG Albright Stonebridge Group, emphasized the urgency for companies to find alternative sources for rare earth minerals, as the Chinese restrictions could force many to halt production within a matter of weeks. As both nations dig in their heels, the path forward remains unclear. While some hope for a diplomatic breakthrough, the nature of the current negotiations seems entrenched in a cycle of escalation. The ongoing trade war not only threatens the economic stability of both countries but also poses significant risks to the global economy, with potential repercussions that could ripple through global markets for years to come. In conclusion, the U.S.-China trade conflict is at a pivotal moment, with businesses and consumers anxiously awaiting signs of resolution. As both sides maintain their hardline stances, the future of this fraught relationship hangs in the balance, with the potential to reshape global trade dynamics for the foreseeable future. The ongoing trade war between the United States and China has reached a critical juncture, with both nations employing aggressive tariff strategies that threaten to unravel the extensive economic ties formed over the past 2 decades. As tensions escalate, The implications of this economic conflict are becoming increasingly dire, with potential repercussions not only for the two nations involved but for the global economy as a whole. U.S. tariffs on Chinese imports have surged to an alarming 145%, while China retaliated with its own steep tariffs now at 125%. These punitive measures have rendered many goods unmarketable, effectively strangling bilateral trade. As Yiling Tan, a public policy professor at Oxford University, notes, the tariff rates are now so high as to be prohibitive of most direct bilateral trade. This has profound implications for both countries, as U.S. consumers and businesses have historically relied on Chinese manufacturers for a wide array of products, from electronics to everyday household items. The latest developments indicate that both Washington and Beijing are aware of the unsustainable nature of their current strategies. Reports suggest that the U.S. has exempted certain electronic goods, such as smartphones and laptops, from its tariffs, a move seen as a necessary concession to ease the burden on American consumers. The Chinese Finance Ministry, however, has expressed skepticism, stating that if the U.S. continues to raise tariffs, China will disregard such measures altogether. The trade war has already begun to reshape global manufacturing dynamics, with many companies exploring alternatives outside of China. Nations like Vietnam, India, and Mexico are increasingly viewed as viable options for new manufacturing hubs. However, the current U.S. administration's Liberation Day tariffs threaten to complicate these strategies, as they impose additional tariffs on countries benefiting from Chinese investments. The rhetoric from both sides has been combative, with Trump administration officials asserting that China is more vulnerable to a trade war due to its reliance on American consumers. Yet, as analysts point out, China has diversified its trade relationships significantly since the onset of the trade conflict, with less than 15% of its exports now directed to the U.S., down from 19% in 2018. Beijing has cultivated new sources for imports, notably from countries like Brazil and Australia, further reducing its dependency on the U.S. market. Nevertheless, the economic pain inflicted by the tariffs is palpable. Institutions such as Citi and Goldman Sachs have downgraded their GDP forecasts for China, indicating that the trade war is taking a toll on the world's second-largest economy. Despite this, Chinese officials remain resolute, stating they are prepared to fight to the end if the U.S. persists in its confrontational stance. The situation is further complicated by the potential for a complete decoupling of the U.S. and Chinese economies, which experts agree would result in widespread pain for both countries. As Ian Osgood, an international relations professor at the University of Michigan, explains, tariffs over 100% are absolutely punitive, suggesting that significant portions of U.S. businesses may struggle to survive under such conditions. The lack of a clear path toward resolution raises unsettling questions about the future of U.S.-China relations. If both nations remain entrenched in their positions, the risk of escalating tensions could lead to not only economic instability but also geopolitical conflict. The intertwined fates of the two economies underscore the need for constructive dialogue, yet prospects for negotiations appear dim, with both sides waiting for the other to make the first move. As the world watches closely, the pressing concern remains: can the U.S. and China find common ground, or will the current conflict lead to a more volatile global landscape? The answer to this question could define the economic realities of the coming years. As the repercussions of this trade war ripple across borders and industries, as tensions escalate between the United States and China, the specter of a trade war looms larger, raising concerns that economic clashes could evolve into military confrontations. Recent developments signal a significant shift in the dynamics of this geopolitical struggle, particularly under the leadership of President Donald Trump, whose administration has made sweeping changes to trade policies while grappling with internal and external pressures. In a rapid series of moves, the Trump administration has not only ramped up tariffs on Chinese imports but has also signaled intentions to extend these tariffs to high-tech products such as semiconductors and pharmaceuticals. Commerce Secretary Howard Lutnick revealed that the administration is poised to announce new tariffs in the coming weeks, emphasizing a national security rationale for these actions. "We can't be relying on China for the fundamental things that we need," he stated in a recent interview, indicating a shift towards self-reliance in critical technology sectors. This aggressive tariff strategy comes in the wake of a tumultuous week in which Trump abruptly reversed course on previously planned negotiations with China, choosing instead to escalate economic pressures. The implications of this decision are significant. Experts warn that the ongoing trade war could not only destabilize global supply chains but also exacerbate military tensions, particularly in strategic hotspots like the Taiwan Strait and the South China Sea. Jake Werner, a historian and director of the East Asia program at the Quincy Institute, cautioned that both nations risk serious economic pain if the conflict continues unabated. Both sides will suffer serious economic pain. The danger of mutually destructive economic warfare will loom over us until a cooperative approach is embraced, he noted. The motivations behind Trump's unyielding stance are complex and multifaceted, influenced by a coalition of advisors with divergent views on how best to confront China. This group includes neoconservatives advocating for a moralistic framing of the conflict, military realists focused on power dynamics, and nationalists seeking to decouple the two economies. Despite their differing ideologies, all factions agree on the need to confront China, viewing the relationship as a zero-sum game that ignores potential avenues for cooperation. China's response to these escalating tensions has been equally assertive, particularly in military terms. The People's Liberation Army (PLA) has expanded its arsenal of medium and intermediate-range ballistic missiles, enhancing its capability to project power in the Indo-Pacific region. Analysts warn that these missile systems pose a direct threat to U.S. military assets and bases, potentially paralyzing American forces in the event of a crisis. Julian McBride, a defense analyst, emphasized the urgency for the United States to bolster its missile defense systems and reconsider its military strategies in light of China's advancements. The U.S. must invest in air defense capabilities and develop strategies to counteract the PLA's growing missile capabilities, he advised. Moreover, the ongoing conflict has created significant uncertainty in global markets. The tech industry in particular is feeling the heat as companies like Apple and Nvidia navigate the precarious landscape of tariffs and trade negotiations. Following a brief reprieve from tariffs on certain electronics, market analysts have expressed concern that new tariffs could drastically inflate consumer prices and cut into profits. The mass confusion created by this constant news flow out of the White House is dizzying for the industry and investors, said Dan Ives, an analyst for Wedbush Securities. As the U.S. and China continue to engage in this high-stakes game of economic brinkmanship, the potential for conflict remains a pressing concern. The recent decisions by both nations suggest that the trade war could evolve into a broader confrontation with far-reaching implications for global stability. Observers are left to ponder whether the current trajectory can be altered or if the world is headed towards a more violent resolution of its trade disputes. In conclusion, the unfolding saga of U.S.-China relations highlights the intricate balance of economic and military power in the 21st century. As both nations grapple with their respective domestic pressures and international ambitions, future developments will be crucial in determining whether a more cooperative and stable relationship can emerge from the ashes of conflict. The stakes are high and the world watches closely as these two superpowers navigate a perilous path forward.